Well, howdy doody. We got a great week ahead of us. What can I say? We're going to be looking at the earnings reports to watch for the week of November 16th. I'll go into some insights on some stocks that I think you should be looking at for earnings, and we'll take a look at it. So we'll just hop right into it. Monday before open, we're going to start off with a pretty good one in JD.com. You're talking about a very massive e-commerce provider here in China, or really Asia as a whole for the most part, but really more of the Southeast Asia region. Pretty big. This is a very big company that's growing numbers at incredible rates. And I think you should expect, obviously, in this time of increased sales, as far as e-commerce is concerned, JD.com is going to put up really good numbers. Now, as far as stock price, I give it a hard one to judge necessarily because the stock's been up quite a bit this year. So you do need to mention that. After them, we have Tyson, and this has been a stock that I've been looking at for the past couple earnings sessions for several reasons. It's not one of my focus ones. I've got 3 focus stocks this week, so have fun with that. But Tyson, not one of them, for a couple reasons. I did just want to say, obviously, just overall, this is a boring stock, and I don't think that should shock anyone in this aspect. The stock it's a boring one, and I think this quarter, I think it's a little bit of a tone down from the previous one. I do. And I think if you look at trends now, we're getting back into that extreme hoarding phase. And I don't think, really for the most part, Tyson products like their frozen chicken wings, stuff like that, it's still selling really well, and it has been through the quarter. But now this most recent quarter here that they're in right now, they're going to be seeing a lot more demand than they were in Q3 right now. So I still think good numbers this quarter are probably due. I think an EPS miss is just in order for them with all the expenses they've been going through. It's been pretty wild. But I do think revenue will do a decent number. Knowing them, just because it's a pretty boring company, I guarantee you, they haven't really been able to ship product out to really enough locations, and it's still been an inconsistency. So I really only expect probably closer to a 5% revenue gain, if anything, year over year. I'd be pretty excited if they beat it for sure, but just in my history with the stock, it's been boring. The company doesn't do much spectacular, even in this time of where they should have utter success. They tend to just be, along for the ride. Then we have Palo Alto, very good Silicon Valley company, tech to its highest degree. Palo Alto is a really good company. I expect really good numbers out of them. VBL Therapeutics, not big on those therapeutic stocks, unfortunately, which I was, but I'm not. Sohu.com, Magic, Casper. You can definitely take a look for Casper if you're looking at what Purple did last week, which is decent numbers. And I'm sure Casper will put up something probably similar. I do think people are buying mattresses quite heavy. I don't necessarily know if I think this quarter they're going to see it as much as they did for the previous quarter, but I think they could. I think people a lot, since they were spending time at home due to the lockdowns, a lot of people reinvested in a nice mattress, and especially with stimulus checks, they really did. So I'm curious how much that leaks over into this quarter, because I think it could be a decent chunk, actually. So I still think they'll be putting up pretty decent numbers. There's Sogyu, AECOM, and Celsion. After close, we have Baidu. Baidu is always an interesting one, obviously. Really good tech company over in China. They do a lot of stuff. Again, I don't necessarily invest in a lot of Chinese stocks just due to the fact of how they report earnings. It's a little bit janky, and not all of them are super trustworthy, but I think Baidu is a really good company that does a lot of good things. Similar to a Google over in China, Baidu is. You see ad rates returning. I think this is a good quarter for Baidu, in my opinion. Smile.com, I've been looking at Smile Direct quite often, obviously, because I do think with a lot more screen time and social media, you see a lot more influencers coming up. And Smile definitely benefits them because, well, braces, whitening, stuff like that. It's a thing you don't think about necessarily, but they're growing business pretty steadily, and it's a really future-proof design as far as What happens if we ever go into more digital age like we are right now? What happens if we have another lockdown? Smile Direct is really the main option for dental work online for the most part. Smile Direct is that provider. So I like what they have in that aspect. Co-Diagnostics, Neptune, Remark Holdings, IQ, which is owned by Baidu, by the way. It's hard to say if these numbers are trustworthy on IQ usually. The stock doesn't move too much either. They've been growing numbers pretty decently, but the stock doesn't move all too much, believe it or not. Yeah. There's Boxlight, Simulations Plus, Joy with 2 eyes, and GAN. Interesting stuff. Tuesday's one I'm really excited about, and it's one of my focus stocks right here. It's going to be Walmart, and I think there's a lot of reasons for it. So Walmart's a stock that's been on a tear, by the way, and you can't deny it, and it's for a lot of good reasons. I think it's going to go on even more of a tear because of the second wave of hoarding coming through, and I think you can absolutely see it, and I work in the industry, so I certainly know how retail's getting absolutely schmammered. Not hammered, but schmammered right now. With business, and especially going into holidays. This is going to be holidays like no other for these places. People are just buying everything, anything and anything under the sun. People are buying right now. It's crazy stuff out there. It's wild. So this quarter, regardless, we're talking about third quarter, which is already passed, but again, would be a very good quarter for them. It's going to be a very good quarter. I expected an EPS of $1.18 versus $1.16 a year ago. Not too crazy. I think they'll beat on that aspect. I'm honestly expecting closer to $1.50. I do think they'll beat. They usually lowball these. Last quarter, I think they put up $1.50 over $1.50 as well, and they beat by a pretty good aspect on profitability too. And on top of that, what's really crazy, I think, is this revenue number. I mean, expected to grow sales 3%. I think it's going to be bigger than that. Last quarter they grew close to 10%, and I think they're going to put up a quarter where they probably grow around 7 to 8% this quarter. I think it'll be a lot better than what the analysts expect here, because a lot of people are still spending money here, nonstop. And they're really going to continue it. I absolutely think they will. So they're expected $132 billion in revenue versus a year ago, 128. I think they'll do better. I think they're closer to 135 billion. For the full year, expecting a 5% growth is pretty crazy. I think they'll up that number as well due to last quarter's super smasher, and I think this quarter is going to be a really good one as well. So keep an eye on Walmart. Just from industry experience, and I do think Q4 is going to be probably the biggest Q4 in history, no doubt, but I'm really excited to see what that holds as well. Then we have the Home Depot. I do think home improvement's still doing a really good job, and Home Depot is, in my opinion, the better of the two between Home Depot and Lowe's as far as who's seeing more benefit. But I do think both are, doing really, really well this year. And Home Depot is going to put up those numbers yet again. And I think, looking ahead, I think people are definitely going to be purchasing a lot of home improvement type stuff for Christmas and stuff like that. So keep an eye out. We have we have Kohl's, and you do need to mention Kohl's if we talk about clothing retailers, kind of what we expect. And you look from a couple others that have reported, like a Tapestry brands, where they showed a 20% decline in terms of revenue. But what they showed with that was 20% for the full quarter. But the last 2 months, there was significant recovery. And I think you're going to see a similar story with Kohl's, where the first month of this is really it's during lockdown. And I think you're going to see pretty steady recovery throughout that. And I think Kohl's is actually really good because of how they're more diverse than just clothing. And they sell home improvement stuff like that as well, as far as appliances and other various things, and jewelry, stuff like that. So I think Kohl's benefits in that aspect. I do think, obviously, the revenue is going to be declining, but I think it's going to be closer to a 20% as opposed to last quarter where it was closer to 40%. I think it's going to be around 20% decline. So I'd expect, if they do better than that, I'd be pretty impressed. Then Aramark, Comstock, Consolidated Water, Itamar Medical, Eagle Point, and Evocua. I don't know on that one. After close, I had to bring it on here as a focus stock. It's NEO, Definitely my best position in terms of holdings because I'm up 2,000% on it. And I wish, now don't get mad at me. I wish I didn't sell 75% of my position already at $15. I regret it. I regret it because I could add a lot more money. But still, let's look at what the quarter is expecting. Negative 17 cents EPS versus negative 238 a year ago. I honestly think they miss on an EPS line, but I don't think it's going to be too far off. And revenue's the big story. Expected a sales growth of 150% and $653 million. I got to be honest, I hate to say it's going to be a beat, but I really do think it's going to be a beat. I think they're going to beat on an EPS standpoint or on a revenue standpoint. I really do. If you've been looking at their sales reports for the last couple of months, they've been beating quite significantly, growing deliveries by 150% each quarter, or each month, I should say. I mean, there's really good numbers year over year. And I'm really excited to see what the EC7 has in stock for them as far as sales too. But I think they're going to beat actually on a revenue standpoint, and I could be wrong, but just from what I've seen from the monthly sales numbers, I think they will, and they should beat this estimate in my opinion. So it's a really high estimate, but I do think they beat. So keep an eye on NEO and what that stock does. Super excited for that. Lazy Boy, nothing crazy to say about them. And Varix Imaging before open. Wednesday, Target. I want to relay what I said about Walmart. Same thing with Target. I think you're going to see extremely high demand this quarter. And e-commerce for them is a big part. Same thing with Walmart. I mean, Walmart's probably going to post 100% e-commerce gain. I guarantee you Target probably posts close to 180, 190 to 200% gain in terms of e-commerce. Just big numbers. And it's going to continue to be that way for a while. Their Q4 is going to be massive in terms of online. E-commerce is really what's driving Target for me in my perspective. I really like what they're doing in e-commerce. I think they probably provide the best e-commerce out of any of the big retailers. Then Lowe's, in my opinion, they're going to do really good, but not. I think Home Depot puts it a little bit better numbers, but I do think I'm really impressed with Lowe's. Regardless, they're going to really do well. TJX, we'll bring into Kohl's what I said about them before. Avaya, Spire, Kingsoft Cloud, Ituran, Brainsway, and Brightview. No major insights on them. After close, NVIDIA is another one of my focus stocks, believe it or not. It's another one, my third one, and the last of which. But EPS line estimate of 256, really high EPS line for them because a year ago they put up $1.78. I think it's a high estimate. I think they're either going to smash it by 50 cents or they're going to lose, or they're going to miss it. They're either going to beat by 50 cents and put up a $3 line, or they're going to miss it. I err on the side of missing it personally. I think they're going to miss that EPS estimate. The revenue line expected to grow 46%, $4.41 billion. I think it's going to be closer to a $4.5 billion, just because I think there's a really big benefit in terms of gaming, next generation consoles. I think they put up a really good quarter. Honestly, I really think they do, and it's going to be closer to a 50% gain, growth year over year. But keep an eye out for NVIDIA stock. The stock's up really big, so regardless of what they do, it's hard to say if the thing will go up even. Billy. Keysight Technology, Sonos. And I've talked about Sonos before because I think it's really cool technology. And I think people have been investing in this type of stuff. These are sound bars and speakers that you put in a room, and they're supposed to really, their high-end quality products are going to be the ones that recognize the size of that room just due to really kind of echolocation, if you want to think about it, how the sound waves bounce back to it, so they can tell what nooks and crannies are in that room so they know how to project the sound better. Sonos is a really interesting brand. It makes a really good quality speaker and sound bar. L Brands, I repeat what I said with Kohl's. I just think L Brands does it a little bit worse because they can't afford their dividend, which, they've cut thankfully. But L Brands, I don't think they're run super well, and I do still think that you're going to expect a 30% decline in revenue. Jack in the Box, nothing crazy. I mean, we're still not at 100%, revenue recovery as far as restaurants or fast food is concerned, because a lot of these places you still can't eat inside, which drives people away. So sometimes people don't want to wait in a big old line for fast food because it's supposed to be fast food. So I get that. You see ZTO, Shoe Carnival, UGI Corporation, and Nuance. Thursday, we have before open what I definitely wish all us men wish we got more of, BJ's. I'm talking about the wholesaler, okay? BJ's wholesaler. Us men want to go there more, okay? That's what I meant. Sorry, that was a giddy laugh. It was a giddy laugh. And then we see Macy's. I mean, Macy's is a dying company. I don't think we can ignore it anymore. Macy's is dying. And we need to accept it. We need to accept Macy's is dying. I think revenue is probably going to decline, 25+% for them. But it's something we come to expect from them. Companies just, it's on its way out. They haven't really converted to an e-commerce platform that is sufficient enough, and they're going to pay for it, unfortunately. Yeah. Canadian Solar after them. NetEase. Barry, Maximus, Opera. Didn't think the provider. I didn't think Opera still existed. Does anyone use the Opera browser? I give it a highly doubt. I don't know why anyone would use the Opera browser when you've got much better browsers out there. Much better. Kiwi, Brady, and Oak Tree. Oak Tree Lending, baby. Then after close, Workday. And I've talked about this as more companies expand to a place like Workday, and I do think more companies will, especially in the modern age of it's hard to do physical interviews, and a company like Workday really does benefit companies in that aspect, where they have third-party people who can do that for companies and take care of most of that personnel aspect. I think Workday sees the benefit there, especially with everything going on. Workday should do pretty well. Intuit, nothing crazy to say about them. Best Inc., Ross, Dress for Less. Again, too much focus on clothing right now. They're going to get hit pretty hard, and I don't think their e-commerce has what it takes to hold up. Kuliki and Safa, Kuliki and Safa, I guess. I don't know. Yeah, I don't know. It's tough to say. Caleres, Post Brand. Post Brand, they make your favorite cereals, your golden checks, your Post Brand makes all the cereals, okay? I can't think of the Post Brands. I'm sorry. But boring company. But, people love cereal. Now, don't they? 360 Finance. Friday before open, we've got Foot Locker and Hibbett Sports. I put them in a similar category as far as that's concerned. Nothing too crazy. I think with lack of demand, really for the NBA, Foot Locker sees kind of a hit because of that. Typically, the NBA is a good sponsor of them, and NBA ratings were down quite significantly this year. It was pretty ugly. Finals ratings were down 50%, so not sure if Foot Locker is going to be benefiting from them anymore. GSX, Tekuru Inc., Buckle clothing store, high-end clothing. Don't know what you're going to be doing really. It's really hard to say because they're highly reliant on malls, and some cities haven't opened their malls back up because, why not? We don't want people to ever do business again. We hate a flourishing economy. That's all I can tell you. We have the EMR group. What is that? I can't read it. It's blurry. It's a blurry one. And then HH. Hulk Hogan, baby. Reported on earnings. Hulk Hogan. The Hulkamaniacs are excited for this earnings. Oh, yeah, brother. Sorry, that was Randy Savage. But you know what? It's okay. We can mix Randy Savage and the Hulkster together because, really, Randy Savage, he really would have beat up the Hulkster a lot. Just going to be honest with you. That's all I got for you today. I hope you enjoyed.